It is the Loan Officer Breakfast Club once again, brought to you by the Mortgage Marketing Animals, whom I'm going to give a cheer right now. Because why not? We have Allison Johnston in the house, the honey badger, my friends. Today's going to be fun. We're going to have a good day. It's also Flux Capacitor Wednesday. So, we're going to take a look at that. All right, let's have a look around the room and see who's showing up. Let's see. A lot of similar people. I'm trying. Hey, Carl, do you see anybody new that you want to?
I see somebody new.
Who's new? Who's new, Kristen?
Are you seeing the same person I am? Rich Lichty? I don't feel like I typically see Rich Lichty. I hope I'm pronouncing that right.
Where's Rich? Do you see Rich?
He's
Where's he
pointing
at?
at me. I don't know if he can unmute.
Hi.
Rich, are you available to unmute? Where you at, man? Here, let's get some house music.
See,
rolling while we're doing
the fear of saying who.
There he
Oh,
is.
there
Rich
he
Lichty
is.
is here. How
Hey.
did you get the name? How did you pronounce the name correctly?
Well done.
Well, I wasn't in the Navy, but my dad was.
So, is it Lichty?
Lichty, H like a K.
Lichty. What's going on, Rich? How are you, man?
We're good. I'm waiting for Mike Collins. He and I kind of work together.
Oh, Mike Collins, good guy, man. Right on.
Where do you live, Rich?
We're in the Laurel, Maryland area, which is midway between DC and Baltimore.
Nice place to be. Good for you, man. Are you native?
Thank
Are you
you.
from there?
Actually, I'm a Penn Stater and Mike's a Marylander, so we have a bit of a tussle there on certain days.
How long
That's
you
what that's been.
how long you been slinging loans for?
40 years.
Good for you, man.
Wow. 40 years. Me too.
Good for you.
Yeah. You're in the cool club. Yeah.
Yeah, right.
Guys like me.
That's before Allison was born.
That's before.
Oh. It probably
It
is.
probably
it really
was.
is. Yeah.
No.
Before fax machines, definitely.
Oh yeah, for sure.
And now we
All
don't
right.
even use faxes.
I know. But there's still some places that want a fax.
Yes.
It's crazy.
I was with my corporation. I was dealing with unemployment for an employee, right? And then I had to change something, and on the recording it was just fill out this form and fax it to
Fax
blah
it
blah blah
back.
blah. I was like, fax it. So good. Yeah. Well, cool, man. Hey, well, thanks for letting us say hi to you this morning. Glad you're
you.
doing well. Yeah, you're working with a good guy for sure. Mike's awesome. So, who else I saw, Carl? There's somebody else who stands out to me,
Who'd you see?
looking totally awesome this morning. I mean, just like
I know.
epically awesome.
I know who
this
it is
gonna be.
too.
Really? Okay. Krista, who do you think I'm looking at?
I thought you were gonna do Kristen Simpson on Spotlight.
No, you were not thinking that. That's
I was thinking that. That
I
was
was
wasn't.
Edith.
That
Look at
would have been
Edith's
something that I would
background.
do. Yes, but I wasn't thinking. I'm in reality somebody else that I'm looking at here who I think is looking epic today.
I was looking at Edith Schubert because she's.
That's who I was thinking. You got it, Kristen. That is exactly who I was thinking.
Love it.
Edith, you have to unmute and say good morning to us. How are you, dear?
Good morning. Good morning.
How are you doing?
Fantastic.
Awesome. Well, it's good to see you. Where are you located?
Springfield, Missouri.
Oh,
Okay,
good
that's-
one.
That's
Springfield,
my neck
Missouri.
of the woods.
Okay.
Back at
You say
school.
Missouri or Missouri?
No. So I understand if you were born here, you can say Missouri, but I wasn't. So
Ah, so you got to say Missouri. Right on.
And Route 66 goes right through there, Frank.
correct. Yes.
Oh,
We're
okay.
talking about Route 66. It goes right through there. Yeah.
Oh, nice. So how long you been in the biz, Edith?
I got licensed in last August.
Oh.
Mm.
Wow. Kindergartner.
Yeah. Boy,
Absolutely.
the response from the crowd was epic, wasn't it?
Yeah.
Well, congratulations.
Good to see you, Edith.
What, did you come from a different industry into mortgage, or were you in
I'm in-
mortgage but something else and became a loan officer, or what?
No, I'm in the financial services industry, so
Mhm.
it's just another tool belt, another tool in the tool belt. So
Good for you.
So what was in your Cheerios that possessed you to do something like this? I mean,
I work with a company that is getting into mortgages, so I'm one of about less than 4,000 across the country that are licensed in our firm.
Nice. So you thought, why not?
Absolutely.
Why not? So how are things going? Do you come here often?
I'm making it a priority to get on these calls. So yeah.
Nice.
Have you
So
started
do y'all do financial planning, Edith? Is that what the main firm does?
Yes, correct.
Well, maybe we could have you as a host, a guest host here in the next couple of weeks, and maybe if if it's okay with the company, and maybe you could give us some pointers.
I'll have to see if I can get that cleared. Sure.
Yeah. Well, we can get it cleared right now. Hang on, Kristen, is that okay?
Oh yeah.
Oh, you're cleared.
Done deal.
Yeah,
That was
done
easy
deal.
on
You're
our
cleared.
end. Yeah. Awesome. Well, Edith, have you started working the plan at all? You get anything in the door yet, or where you at? Got some realtor partners yet? Because you're pretty doggone new.
I am. I've closed 2 loans, and we're rolling out some company incentives on hosting new owner workshops. So
Got it. Okay. Yeah, you got that nice Carl. Good advantage, huh? She's part of a big financial services company, so now they can just roll mortgage into that.
I love
and
it.
Be a part of that. It's real smart. Yeah.
The most challenging part of any sales is traffic,
Yes.
and traffic
Yeah.
you got. And
Yeah,
so
you
once you
got
have
it.
traffic, now it's just educating that traffic that, oh, you've been trusting us for this with finances. My gosh, how it doesn't get any better. You've been trusting me with this. Well, we also now do this. Who doesn't want to do one-stop shopping? So I love it. That's a great advantage. Huge opportunity.
Yeah. Good stuff. Well, thanks for joining us, Edith. Thanks for coming here and keep showing up. Okay.
All right.
All right. Terrific. Well, Carl, I think we need to bring on Allison Johnston, the honey badger.
Hey, don't forget. Don't forget we got the flux capacitor today too.
Flux capacitor Wednesday. Thank you, Kristen Simpson. Today is indeed so. Sorry, Allison. I gave you the walk-up music, but I have to interrupt it.
This is a great segue.
That's right. So flux capacitor. Kristen's going to put it into the chat, the picture of the flux capacitor. I need a sound effect for flux capacitor. I really do. I need some sort of, you know what I mean?
Yeah,
something like that.
Definitely need to get some Back to the Future thing going on there.
Right. If you're not familiar with Flux Capacitor Wednesday, on Wednesdays, we simply check in to see how much time is left in the year, what the capacitance of the year is that we have left. We are officially at 50-50, Carl. It is 50. 50% of the year is left. So, you know what? You could look at that 2 ways, right? You could look at it like, oh my God, only 50%. Or you could look at it like, dang, 50% still left. You know, I'm more of the dang, 50% still left kind of guy. I mean,
there's
how about
still
you?
time.
That's a lot of time that doing the right activity, you can really move the needle in a 6-month period. And I've always found the last 6 months has always, and for me personally, has always been stronger than my first 6 months.
Really?
Always. Yeah.
Mm-hmm. All right. So, and of course, Vicky Lasher had to correct me and go for the fine details at 48.01%. But we're rounding it to 50, Vicky, for this episode. But I appreciate your thoroughness, as always. So, yeah, 50% left, man. We've got half the year left to hit our goals, you know, to hit those goals that we set for ourselves and promised ourselves that we were going to do. So, as normal on Wednesdays, where are you at? Are you ahead of schedule? Are you at par? Or are you behind? No judgment here whatsoever, but just where are you at in this? Are you ahead, at par, or behind? Put it in the chat. Let us know. And you know why I like to do this ahead, at par, or behind in the chat is because every week that people come here, you know, if they keep saying par, or behind, maybe they'll go, maybe I need to get going. You know what I mean? Or something, you know? So there you go. Way ahead and loving it, Marty Guy Fink. There you go. Oh, the rock way behind. Come on. You got it, brother. All right. You guys got this, man. Don't forget, 50% left in the year. Here's the good news. If you come here every day, look, you know the plan. Be engaged with Mortgage Marketing Animals at the main office. Become a member. If you're behind, you can catch up and exceed it. You just need to get on with the plan and get the community support that we have at Mortgage Marketing Animals and Call Stars, right, Gen Z?
Right.
And at Call Stars, most of the heroes that you see on this show every single day that are saying they're killing it are members and are on Call Stars. End of story. That's the truth. That's how it is. So we would encourage you to go to dailysuccessplan.com and at least have a conversation with us up there. Just a conversation, just a chat. Let's talk about it. dailysuccessplan.com. That's where you want to go. If you're getting value from this already, go ahead and tap that like button. It helps more loan officers find content that actually makes a difference. And hey, if staying ahead of the market and learning what's really working in our industry matters to you, hit that subscribe button and ring that bell so you don't miss another episode. We read every comment, so drop your thoughts down below. We'd love to hear from you and know what's working or what you'd like us to cover next. Thanks for tuning in, and we'll catch you here next time. All right, so now let's go once again to the Honey Badger. Allison Johnston with SMP. What's up, Allison? How are you?
You know, Allison. The funny thing is, you have to always keep in mind it's 5:40 where Frank is at. It's 5:40 in the morning.
It is. Mm-hmm. Well, half the day's over for me, so
Yeah.
So, how's it going, Allison?
Everything's good, thanks. How are you?
Doing good.
Awesome.
So, just to tee up Allison, if you haven't been here when Allison's been on, she is the president of Success Mortgage Partners and also heads up what do we call this committee, Allison? The loan committee, or what do you call the committee?
The loan committee, yeah, that's the committee where we review files and turn them into yeses.
So just so you guys know, they have an incredible success rate. I've been hearing in the, low to mid 80 percentile range of converting deals that were struggling or have been told no by other companies even, and able to turn those things around. It not in a dirty, tricky way, but just in a way that, other companies and teams, underwriters, whatever, might not have seen it fully clearly enough to be able to get that done in a proper way. And that's what they do. It's what Allison does. They do it every day at the end of the day, right, Allison? You take any
2
files?
2 o'clock every day. We have a committee that meets. And a lot of the times, trust me, it's easier just to say no, right? That's not our mindset. Our mindset is to find the yes and try to see how we can make the deal work.
Great.
And I think that makes a big difference when you have that mindset. And so we see loans that are turned down from other companies, and then we see loans that come in from our loan officers that are just tough, right? They're going to require a little bit more elbow grease to get it across the finish line.
Yeah. Got some examples, recent ones that are kind of unique and fun to talk about?
I do. And one was I've been in the business 33 years, and this one I've never heard of. So we did some research on it, and we actually had one that was a perpetual homeowners insurance. So basically, after doing some digging and getting some information, we are able to do this loan. We already closed it. But in this case, it's a policy that's paid completely upfront. It's a $13,000 premium. There is no policy expiration date, and there is no annual premium due. The policy is in effect until it actually cancels. So it's a 95% LTV with no homeowners insurance. There's no collection of escrows. And so it took us some research because we had never heard of it before. And then it took us some elbow grease, but that loan successfully closed a couple weeks ago. So that was new, and that was in the state of Maryland. So
I've never heard of that.
I've heard of that. I've never seen that come across, but hey,
I have been doing this for 25 years now. I have never heard of a paid up front. Yeah, so I could see where the underwriters were like, wait a minute, this because you have to have homeowners insurance, of course. And on this, I guess they had to verify it was a real thing, I guess.
Yeah, and I think the easy answer would be like, no, we're not doing that. But after some digging, we closed that loan. We had another one that was our.
Hey, Allison, before you move on to the next one, sticking with this one real quick, was the issue just that it was a forever insurance policy, or was there a debt to income ratio thing that we were messing with?
That was really the homeowners insurance was the sticky part on it.
Which Frank, I guess it would actually help the debt to income ratio.
It would, because there's no premium.
Yeah, you don't have an insurance payment, which in Florida that's a substantial part of your monthly payment.
Yep.
Hey,
California too.
Allison, Mary's wanting to know what was that called again? What'd you call that?
Perpetual homeowners insurance.
Perpetual home. Todd's asking what company offered that?
I could look. I don't know. It was in Maryland. All I know is we had to reach out to investors. We had to reach out to Fannie. We had to get the information because we never heard of it. They pay one premium, $13,000 upfront, and then the policy stays in effect, which that's pretty slick if you think about it, because premiums go up every single year.
Right.
Yeah.
And it's an all upfront upfront paid policy.
Yeah, I'm interested for myself.
Yeah.
I mean, that sounds like a real good. So how was it proven? Like, how did that one?
Well, we had to talk to the agencies and we had to get some information. We had to talk to the homeowners insurance because we'd never heard of it before. So we had to do some research and then we were able to get it through the system. It is completely acceptable. And in 33 years, I've never seen that before. And our team had neither. So I think that's one thing too, when you have a new situation that you haven't seen. I know I said it earlier, it's so easy to say no, right? That's the easy answer, but that's not how we operate. So then we have to dig and do the research and find out because, you know, we didn't want our loan officer to lose that deal because it's not just that one deal, it's all the other deals that they're going to get from that referring partner, the realtor. So that was one that was very unusual. But as I said, it was a 95% LTV and had no homeowners insurance collection at all. So
Very interesting.
Very
Cool.
high, very high
Frank, we
in
need
the chat. And he says, thank you and you're welcome.
Yeah, we need to find out, Frank. We need to have that insurance company come as a guest.
Yeah, that's not a bad idea. That'd be great.
Interesting thing. Yeah.
Very
Barry, if you got to
Baltimore-
connect on that, get them to us.
It's
He said
only
it's
in-
Baltimore Equitable Insurance.
it was
Maryland and
Maryland.
PA only.
Yep. It was a Maryland property.
Yeah, you're probably not going to find that like in California,
No.
Florida.
I'm thinking you're not going to find that in Florida. I'm just saying.
Florida, you get washed away every year. In California, that gets burned down and thrown in the
Exactly.
ocean. So
exactly.
All right, cool.
But they're the best states to live in.
They are the best.
Anyway.
You got me there. Yeah.
What else you got, Allison? What else did you do?
We had a couple other ones where they were FHA manual underwrite, didn't meet the guidelines. It was a decline from another company. We took a look at it. We were able to get some credit refresh. We were able to work on the credit a little bit, and we finally were able to get an AUS approval, which is so much easier than trying to do a manual.
How long did that process take?
That we were able to save. And then it's just like little things, and I don't know if the loan officers on here have noticed, but sometimes we'll run a loan through DU. It's getting approval. It's doing great. There's a final run and it will refer. And I talked to Danny May about it yesterday. I think they've tweaked a little bit of the engine. And I know we've talked about this previously. Sometimes if you have too many runs on DU, it's going to refer it, right? So you have to rerun a new case number, a new case file within DU to get a brand new DU attached. And then some of the other stuff is just tricky appraisal stuff that we've seen, working with appraisals on stuff. You got to love when they'll say that there's mold in water, but then they mark it as is, not subject to. So just working through some of those deals as well. But we still are closing loans. We're still overturning denials. And I would just say if your company doesn't have a committee, they should. And just, you know, as we said, call the agencies, do not give a case number. Do not give a DU number. Just call and always say it's a scenario because you don't want them to tag it because sometimes you have to call back because you might not like the answer that you get. But I would just say the most important thing is make sure you've done everything you can before you say no to that loan, that you have looked at every single avenue possible to make that loan work.
I love it, man. You know, while we've got Allison here, Allison, do you mind just if somebody throws I know, full disclosure, if Allison gives you a tip on a deal, that doesn't mean it's going to go through or whatever. But do you mind
and
if
it's
someone,
hard because every deal is different, right?
But can someone throw a thing in the chat for you real quick if they had one? Just like, hey, what about this or what about that, and just get your thoughts on something, or is that okay?
I mean, I can try to answer it for sure.
Okay, if you got something you want to run past Allison, throw it in the chat while we're still shooting the breeze with her. On that credit. Oh, Marcio's already got his hand up. All right, go for it, Marcio. What do you got?
Morning, everyone.
Morning.
Allison, we closed a loan last month where the borrower was retiring, getting a pension, and had already received his Social Security award letter. The first payment is to be received this month of July. We had a really hard time with that. We even called HUD, and we were told, hey, it's a future payment which within 60 days, so it should be approved. But just going back and forth with the lender took a full week. It was really frustrating. Do you have any advice on how we could have handled this differently? that's a expected future income, and it just turned out to be a big old mess. But we closed on time, but it was frustrating for sure.
So when the individuals that are calling, do they have you on the phone with HUD or Fannie or Freddie? Or no? Do the underwriters just call?
We called, my processor and I called. We got the positive response that we wanted. And then I communicated that to my AE, and he said he also called and got the same response, and he communicated that to the underwriter. But the underwriter kept saying, he wanted to see the first Social Security deposited into the account, and that's not the guideline at all.
Right.
And just clearing that took about a week, and it was so wanted to pull my hair out on that one.
Yeah, I think sometimes when I hear stuff like that, it's an underwriter digging their heels in, right? I always say that's a feel-good condition window dressing, right?
Yeah.
Makes them feel better. The only thing that I could say in that case, you did close it and it is on time. And we've closed loans like that before, because when you call FHA, they can give you some clear direction. Sometimes they give you some direction that you don't like, right? But you already have the award letter, he's getting it. And if they really felt that way, the only thing that I would say is you could always follow up with the deposit later if they wanted to see it. Right?
Correct.
If they were going to tell you, I'm not going to close that loan, right? I would say, well, I can get you the follow-up documentation afterwards. We've gotten documentation after closing as well. Right.
Exactly.
And just follow it up with the file if you're really going toe to toe with an underwriter.
Right. And then that's what I suggested, right? Like, make it a post-funding condition, and I will get you a copy of that. I will
100%.
bank my reputation and the fact that we might have to buy back this loan on that. But they eventually just did acquiesce to our request and did not even make it a post-funding.
Yeah, but it's a lot of stress and anxiety, right?
Yeah.
Totally.
And let me tell you, when you get a repurchase, it's not for that. Right? A repurchase is usually because you flat out missed the guidelines. In this case, you met the guidelines.
Good to know.
So I would just remind them of that. Like, once in a while when I get some scenarios, or if I get like an LOX, like we'll go back to the loan officer and say, hey, remove paragraph 2, right? There are some things that, let's say you send a bank statement, it has a large deposit. Do I really need that bank statement? I'm not going to kill a deal over a bank statement, right? Especially if it's an older bank statement. I want to look at what I have right now. So I would just say, I'm glad that they closed it. And I would just make sure if you ever have a situation with that, with the underwriter, I don't know if you can talk to the underwriters or not. I would just get on the phone, listen to their concerns, and just explain, this is the guideline. Why is the additional documentation needed? That's just my suggestion. Or pick it up post-close if they really don't want to do it.
Good stuff, man. Thanks, Marcio. Great question. Allison, thanks for the response. Great response. Hey, in the chat, does Fannie Mae recognize short-term rental income?
Yeah, I'd have to look at the guideline for that. I don't know that off the top of my head.
No worries. Hi, thanks for enjoying Loan Officer Breakfast Club here on YouTube. I just wanted to drop in and remind you that if you're a newer loan officer and you're trying to get to that 2 or 3 deals a month, or if you're seasoned and you're trying to get from 50 to 60 or 60 to 80, Mortgage Marketing Animals has you covered. We've got the full gambit from start to finish, top to bottom. Everything you need is at mortgagemarketinganimals.com. There's a reason that mortgagemarketinganimals.com is the #1 mortgage coaching platform in the country. So check it out, mortgagemarketinganimals.com. No worries. This is a good one too. Ron Perro's asking it. The work history with FHA, he's got one 9 months, right? Is there ever a scenario where you can get that done, FHA, if it's under 12 months or whatever they're looking for?
What did they do prior?
Yeah. Ron, can you unmute? You got some time to
What did
chat?
they do prior to that?
Yeah, he's a 20-year-old, so basically straight out of high school.
Yeah.
And so just he worked part-time last September to January at UPS, then went full-time at FedEx starting in January. So he's got basically like 9 months of employment. And I said, I was like, I'll just try it. And I ran it through AUS and it ran approve eligible.
Yeah.
But I've asked several lenders and they're like, no, it's a 2-year roll for FHA. You can do maybe conventional. So
Yeah,
but
I would
ChatGPT
definitely
says
take a
it's
look
not.
if you could document, is he did he take any classes in high school, right? Was there anything that he did in high school related to what he's doing now? I mean, you'd have to try to see if you could piece it together.
Okay.
Yeah, but they're pretty much 24 months.
Yeah.
Yeah. Cool.
But conventional, maybe.
That's what
Okay,
a lot of them have
conventional.
told me, that they're like, I could do conventional if he's got a year. So basically in September.
Yeah.
Yeah.
Do like a home possible or an affordable program at 97.
There you go. All right. Okay. Anything else we should look at? Kristen, see anything we want to bring up here? Or?
I would just say the most important thing is making sure you have open dialogue with your underwriters to be able to get on the phone and talk to them about the scenario. And then also, if you are going to call an agency, make sure that you're on the phone too, right? With the underwriter. And then you guys get the same information. And it is important how you ask the question. Right? If you call and say, and the underwriter says, that's why I said the loan officer should always be present on the call. You can't do an average income of blah, blah, blah on variable. Is that correct? And I'm going to tell you on the other end of the phone, they're going to say yes, because they don't want to go against the underwriter on the phone, or they'll say, well, it's your reps and warrants. So it's important how you ask the question. You don't want to, it's like leading the witness. You don't want to do that, right? You want to be able to give the information to try to figure out how to get the deal to work. So I would just recommend that you're on the phone as well, because you as a loan officer are going to have more information about the file than maybe that the underwriter does. But the most important thing is open communication, right? That's number one. And two, making sure the people that you're dealing with, your underwriting team, wants to close the loan and looks for the yes to put in the elbow grease to get it done.
I love it. It's so great to have you on, Allison, and go through this stuff and see the examples and just get the tips on how to maybe get a deal through the system. It's great stuff, man.
It's one thing, you can be great at your marketing and your prospecting, but if you can't close the loans, it's all for naught, so.
And I think it's important that the team too that's supporting you understands it's just not this one deal that we're talking about. It's all the other referral deals that you might not get because you're not closing this one deal. So I think that's important that the team realizes that it's just not this one. It's all the other ones that you're not going to get going forward if you can't make this deal work.
Right.
Because at the end of the day, the agent doesn't care. They just want to make sure that deal closes, regardless how much hair, regardless how many problems that file might have. They just want to make sure it closes on time.
And especially more so if agent gives loan officer referral, loan officer says, yeah, let's get this going, get it moving. In agent's mind, it's like, okay, well, you seem to believe that we've got a shot here at getting this done. So we've got the ball in motion, and then if we run into snags and we aren't able to perform on it, then it does become kind of a problematic thing for a real estate agent.
It does. And I do see some comments on here on variable income, which we see a lot of variable income. One thing that I would say too, if you can get a letter from an employer that states this employee does not work less than 30 hours, I'm making that up, right? And you have pay stubs that support that. And as long as they qualify at 30 hours, you can use that, right? I see variable income that's crazy from paycheck to paycheck. But if I have consistent paychecks at 30, 32, 35, whatever it might be, and you can qualify them at 30 hours or 32, whatever, we've gotten letters from employees that will say they won't work less than 32 hours. And that does satisfy the Fannie Mae guideline.
That way you don't have to average. You can just go with the 30.
The 30 hours, right?
Yeah.
I mean, that's the best case scenario that they qualify at what you have pay stubs for, even if it's less, right? But we do see a lot of variable income that does cause a little bit of some issue and some extra, elbow grease. I know also there's some comments on declining values. I would just make sure, is it really a declining value? What I would have, I don't know if you have an appraisal team that talks to the appraiser, is it really a declining value? Is it going to affect marketability? So many different types of things you can do on that appraisal, and is it really declining, right? I would say, depending on the appraisal, depending on the situation, we have gotten some not great appraisals, right? If you feel like there's a material defect in them, you can order another appraisal as long as you document it.
How would what do you mean by document it? Just
We
a letter
document it
saying,
internally because we've had some situations where I hope there's no appraisers on here. I don't mean this with disrespect, but we have some appraisers that just dig their heels in, won't look at another comp, put a comment on there they shouldn't have, right? And so if we say we've had a conversation, we've gone through, the rebuttal process, and this appraiser isn't moving, I have ordered another appraisal. We do not log the appraisals on FHA till right before it's a clear to close. And we do that because the second you log it, it's tied, right? Now you can document and get another appraisal, but we run a panel of appraisers, which I don't know, a lot of companies I'm sure do. You can completely do that. The reason why we do that is we pay them every single week. We have a great relationship with them. Of course, I can't call them and say, I need this value to come in here, but I can call them and say, why didn't you use these comps? And sometimes once in a while, except, on VA loans, we have no control over that. But once in a while, we get an appraiser that's just having a bad day and isn't willing to work with us, and we document accordingly.
Cool. Brad, you got your hand up real quick and we'll get on out of here.
Yeah, I'm not sure how much Allison has in Florida, but sometimes there are master insurance policies in condo developments that have a hurricane deductible. And Fannie and Freddie will only go 5%, but they'll go higher than that because they're trying to keep the premium down. Have you found a way to get around that?
I haven't, but I can definitely ask the team if they've seen that come through.
I've run into it twice. One was at 7%, and another one that just came up recently was at 15% deductible.
Holy cow. Yeah. Trying to keep those premiums down, I'm sure.
Exactly. And the association doesn't have any motivation to change it, to bring the premium to, to make the payments higher until someone has to go in there and do a loan, and they can't get financing. They can go in cash, but they can't go in with any financing. Thank you, Allison.
Thanks. Well, thanks for having me on. I really appreciate it.
Absolutely. It's always a pleasure. You're a big hit here on Loan Officer Breakfast Club, and it's always good information. Really appreciate you, Allison. Thank you very much.
And Allison, I'll see you in a couple weeks.
You will.
Me and Kristen, myself, and Diane heading up to hang out for a couple days up there. So
that's awesome.
Looking forward to hanging out.
Seeing you guys.
Yeah.
All right. Good stuff. Thank you, Allison,
everyone.
again. You bet.
Have a
See you
great
later.
day.
Have a good one.
Bye.
All right. For the rest of us today, hey, it's Wednesday, man. Today is Past Client Day or Sphere of Influence, right? So we're going to make those calls. Again, I think it's probably, especially now with rates improving, it's such a good time to call the Past Client database. Not only can you pick up deals out of them, but don't forget, the reason you're really calling is to see if they know anybody else that needs your help. So that is what we do.
That's a big mistake a lot of loan officers, including myself, make early in our career, is we think calling our past database to get their loan, and we think, well, we just close on them. No. Most of our past database loans are their friends, family, and coworkers.
Yeah.
So never, even if you say, hey, I've got everybody at 2% interest rate or 3% interest rate, it's not them, it's their friends, family, and coworkers, or family members, something like that. That's where most of the deals come from. Not some, not a lot, but most of them come from that. So don't ever overlook that.
Good stuff. Thanks, Carl. All right, guys, don't forget, we are off tomorrow. And of course, we are off Friday. So we will be back Monday. We're going to have the Connecticut Crusher featured. Carl, we're going to see what it's like to live a day in the life of the Connecticut Crusher, who's doing 13 deals, got 15 in the pipeline.
I'm picturing this little carrier thing, and it's like me and Frank and, a couple other guys, with a thing on our shoulder, and she's sitting in the little canopy, and we're walking down, and so, I don't know what you call those things, but
I think it's a palanquin. Is it a palanquin?
A palanquin?
Is it? Am I wrong?
Well, you could make
people
that
know.
up,
Chris Johnstone's laughing hysterically at me right now.
I wouldn't notice.
Chris, is it a palanquin? What is it? You guys do this in Canada, don't you? You tote people around on the chair with the poles.
Nope.
I can't hear you. I'm gonna give you sad trombone.
Come to find out,
You're my
Alex,
friend.
It's actually a medical issue, and Frank, you need to go see your doctor. So.
Right. I don't even know what it is. All right, guys. Hey, happy 4th of July, everybody. And we'll catch up with you guys here on Monday. Thanks for joining us as always. We'll see you later. Adios, my friends. Bye-bye.
Wonderful weekend, everybody.